Lesson 2, Candlestick Basics. Welcome back to the 1015 Trading Academy Beginners course. In this lesson, we're diving into candlesticks, what they are, how to read them, and how they tell us what the market is doing. Once you understand candlesticks, you'll be able to see what buyers and sellers are up to, which is key to making good trades. Let's break it down. What are candlesticks? Candlesticks are the language of the market. They show us how price moves over time. Each candlestick represents price movement for a specific time frame. Since we trade the 5-minute chart, each candle shows what happened in that 5-minute period. Breaking down a candlestick. Here's what a candlestick tells us. The body shows where price opened and closed. The wicks show the highest and lowest price reached. Green candles, which are also called bullish candles, means that the price closed higher than it opened. Red candles, which are also called bearish candles, means that the price closed lower than it opened. What candlesticks tell us about buyers and sellers. Every candle is a battle between buyers and sellers. If a candle closed green, buyers won. If a candle closes red, sellers won. If a candle has long wicks, it means price tried to move but got rejected. If you see a candle with a long wick at the top, it means buyers tried to push up but sellers took control. That's a bearish sign. If you see a candle with a long wick at the bottom, it means sellers tried to push up but buyers fought back. That's a bullish sign. Special candlestick patterns to watch for. Now let's go over a few candlestick patterns that can give us clues about what might happen next. Number 1, engulfing candles. A bullish engulfing means strong buying pressure. It can mean price is about to go up. A bearish engulfing means strong selling pressure. It can mean price is about to drop. Now let's take a look at the charts and find some engulfing candles together. We're going to find both bullish and bearish engulfing candles so that you will know exactly what you're looking for when you see them. Look at this chart and see if you can spot the bullish engulfing candlestick patterns. Then I'm going to point them out to you and give you some extra tips that can help you. All right, let's see if you are right. When looking for the bullish engulfing candlestick pattern, you want the second candlestick after a downtrend. So this will be the downtrend. This is the end of that downtrend. This will be your first candle. This will be considered your second candle, the bullish candlestick. So if you notice right here, the close, the low, this is the low of this bullish candlestick, is lower than the low of this bearish candlestick. The high price, which is the top right here, is higher than the top of this bearish candlestick right here. We're not paying so much attention to the wicks, okay? We're mainly paying attention to the body. So you see how the body of this bearish candlestick is engulfed or swallowed by the body of this bullish candlestick. This qualifies this as a bullish engulfing. And what do? Start moving up. Got a slight dip right here, but overall, we're in an uptrend. I'm gonna skip over this one for now, and I'm gonna come back to it. So as we see right here, we have a slight downtrend. These three big bearish candlesticks right here. This will be your first candlestick. After the downtrend, this will be considered your second candlestick. This bullish green candlestick right here. Notice the low, slightly lower than the low of the previous bearish candlestick. And the high is definitely higher than the high of the previous bearish candlestick. So this bearish body is engulfed or swallowed by this bullish candlestick. And then we start moving up. We have a slight dip right here, and it creates another one. Same thing. The low of the second candlestick after the bearish is lower than that one. The high is higher than the previous high on that candlestick. This body is engulfed or swallowed by this bullish candlestick right here, and then we start on the uptrend. All right, I'll save this one for last. So this one is unique in the way of, notice how these long wicks are pointing towards the bottom like this. When I see this, all I see is a area of support. We'll talk about that later. But you have an area of support right here around these wicks. Now all support really is a previous price area where the price touches and bounces up. It supports it. So instead of continuing to drop down, this area right here supports the price moving up. Okay. The engulfing pattern is right here. You see, after we have a downtrend, this is your first candle. This is the second candle. Remember, we're mainly looking at the bodies, not the wicks. Now, sometimes the body won't be exactly in the middle, or these lows and highs won't always match up. But as long as the high is higher than the previous high, that's normally a good sign. All right, so this body is definitely smaller than the bullish body right here. And if we include that area of support, what do? Bounce up. So that would have been a good move. All three of these would have been good moves. This one might have been a little risky. In my opinion, this would have been the better one. So just keep in mind that just because you see a bullish engulfing pattern doesn't mean that the price is absolutely going to go up. It means that it could go up. It's a good possibility that the price will go up. So this is a good example right here of could, because it did, but then we did back down. But this one absolutely went up. That's all for the bullish engulfing candlesticks. Let's go to the next. Number 2, doji candles, indecision. A doji candle looks like a plus sign or a cross. That's because the opening and closing price are almost the same. The candle has little to no body and just wicks above and below. So what does that mean? It means buyers and sellers were fighting and nobody won. The market is undecided. This is called indecision. A regular doji is most powerful when it forms at support or resistance. At resistance, it could mean buyers are getting weak and sellers may take over. At support, it could mean sellers are running out of steam and buyers might step in soon. Let's go to the charts together to find some doji candles so that you will know exactly what you're looking for. Take a look at the two sets of dojis that I have a box around. Notice the form of the body. And notice this red box right here. This is the area of resistance. See how price came up, formed the doji, and dropped down. Came back up to this level of resistance, dropped back down. Came up again, dropped back down. Same thing. Come back into this level of resistance, got rejected, came back down. So at resistance, it could mean buyers are getting weak and sellers may take over. This is not always a 100% guarantee, but a strong possibility, especially when you have more than one doji. Now let's find some more dojis that are at a level of support. Take a look at this area right here. See this green area? This is the area of support. We have a series of doji candles, all different shapes, all different sizes right here. Came down. The market was indecisive. It's called indecision. Remember, didn't know what it wanted to do, but it knew that it was going to settle in this area of support until we got these greens and start bouncing up. These doji candles were indecisive, but we have a series of them. Remember I said when you have at least two, it's a strong possibility that the price is about to reverse. And we have more than two right here. 1, 2, 3, 4, 5. You could maybe count this as 6. The body's a little wide, but it's just a different variation. And as you see, it bounced up from the support. Price rose higher. So price was coming down right here. Hit this area of support. And then the price started going up. That's a good move right there. So like I said in the notes, as support, it could mean sellers are running out of steam and buyers might step in soon. And this is where the buyers stepped in at right here. So price comes down, price hits the area of support, forms the dojis, it's indecisive, and then decides that it does wants to go up. And there you have it. And number 3, the dragonfly doji. The dragonfly doji looks like a capital T sign. It can show up after a downtrend or an uptrend. However, it's more useful after a downtrend. It has a tiny or no body and a long lower wick. There's little to no wick on top. What does it mean? Sellers tried to push the price down, but buyers completely reversed it before the candle closed. How to use it in trading. A dragonfly doji alone isn't enough. You wait for confirmation, like the next candle closing higher. It's best when seen at strong support levels or with high volume. How candlesticks help us trade. We don't just trade because we see one candle. We use candlesticks along with strategy and confirmation. But reading candles is the first step. Now that you understand candlesticks, you're one step closer to reading price action like a pro. In the next lesson, we'll cover how to use the 5-minute chart to find trade setups. See you there.